What is the difference between temporarily restricted net assets, question from the nonprofit community, and deferred income? Oh, thanks, Andrea. Beautiful. So the difference between temporarily restricted net assets and deferred income. So deferred income only applies to your organization if you sell services, or you typically wouldn't see it with products, but if you sell services, and if your organization received a payment in advance, but those services have not yet been provided by your organization. It's like reverse accounts receivable. So accounts receivable arises if your organization provides services, let's say to members, but a certain member or batch of members didn't yet pay. That you'd show the income and you show accounts receivable. But if someone pays up front, but your organization has not yet provided that service, for example, if you have an event with an upfront deposit, maybe it's an educational seminar, maybe it's maybe it's some other type of service that you get paid up front, that's actually deferred income, which is a liability account on the balance sheet until you actually provide the services. Then you're even Steven, and you can tell your accounting department that you're even Steven, you've provided the services, and they'll make the entry to recognize income, which means to zero out the deferred income account and show the income actually as earned on your profit and loss or on your income statement. On the other hand, temporarily restricted net assets has nothing to do with services that your not-for-profit organization provides. Temporarily restricted net assets, which I couldn't become a CPA until I could say that without stumbling over my words. Temporarily restricted net assets. This has to do with donations or potentially grants. So if your organization has received money in the bank account that is reserved for something to be used at a future time, or reserved for a particular purpose. The first one is called a time restriction, and the second one is called a use restriction. And you're not supposed to recognize it as income on the income statement until either that time has come, or if it's a use restriction, until your organization has actually done the things that donation is designed to cover. Again, this is not about deferred income, and it's not about providing services for money. It's about maybe someone is giving you a donation to cover a scholarship. That's a temporarily restricted net asset, and you don't recognize that as revenue necessarily until that scholarship is paid out. Then you'd recognize the expense, and you'd recognize the income and zero out temporarily restricted net assets all at the same time. So great question, and short answer, one has to do with services that your organization provides for payment, and one has to do with donations or other grants. Thank you so much for asking. And now you can go back to your accounting department and be like, I know the difference between temporarily restricted net assets and deferred income. Or you can even use the term in a sentence just to show off your newfound flair. And you can sound super saucy, like, hey, did you record those temporarily restricted net assets yet? Yeah, I know. All right, good. So, who couldn't use a little panache by using accounting jargon? Anybody buying that?